Today, we are going to learn the impact of journal entries on the working capital. So, every journal entry will be having two components called debit and credit. When we check the impact of journal entries on the working capital, we have to check these two components. These two components can fall under current assets or non-current items. Current items or non-current items. So we will see what are current items. Current items means when we are writing the journal entry, either the debit or the credit includes current assets or current liabilities. In the sense, we could say current assets example as debtors, bills receivable, stock, all those things. And current liabilities examples are creditors, bills payable, all those things. So when we write the journal entry, sometimes our credit will be including current assets or current liabilities, or sometimes the debit will be including current assets or current liabilities. In such case, we will call that item of debit or credit as current items. Then, in another case, like other than the current assets and current liabilities, if any other item is coming on your debit or credit of journal entry, which is called as non-current items. So current items and non-current items, I think it is clear for everyone. Like non-current items are not falling under current asset category or current liability category. Now, when we check the impact of journal entries, we need to check two basic rules. The rule says like this: when your debit as well as credit are current items, that means both the debit and credit are same, then there is no impact. Same way, I could also say my debit as well as credit of a journal entry are non-current items. So in such case also, there is no impact. So we will see when the impact will happen. When the impact will happen, when your debit as well as the credit are different. That means debit is a current item, but credit is a non-current item. Same way, either credit is a current item and debit is a non-current item. So both are opposite, means there is an impact on the working capital. So we will see some examples here. In this example, payment made to creditors. So when we make the payment to the creditors, what will be the journal entry? Cash is going out. So we will write the journal entry like this: creditors account debtor, creditors account debtor to cash, because cash is going out. So in this journal entry, we could see debit and credit. Two components are there in this journal entry. So debit is creditor and credit is cash, right? No? So when we check this, both the components are falling under current item category, because creditors means what it is? It is a current liability. Cash is a current asset. Because of this reason, there is no impact on your working capital. Your working capital will not increase or decrease, since your debit as well as credit belongs to current category. Now, we will see another example: issue of share capital. When you issue the capital, we are receiving what? Cash we are receiving, right? So cash is coming in, cash account debtor to capital. All right, cash account debtor to capital. So we will check. My debit is cash. Cash is what item? Current item. And capital is a non-current item, because it is not a current asset or a current liability. So both my debit and credit are falling under different categories. I could say there is an impact on my working capital. Since we are receiving the cash, or cash is having a debit balance, cash is increasing, the working capital will also increase.